Hello, everybody, and welcome to Ticker Talk for Wednesday, November 23rd. Everything we do here is for educational purposes only. We're not investment advisors. We do not provide investment advice. All statements made here are my own personal opinions, not to be considered advice to buy or sell any security, and all trading investment decisions are your own and done at your own risk. I think everybody knows who I am. If you're watching that recording, go smash that like button, please. And we're going to take a look at the market. I'm going to go through this part quickly because, as I'm sure you all know, tomorrow, Thursday, is a holiday. Happy Thanksgiving to all my American friends. So markets are closed tomorrow, and markets closed early on Friday. So we opened at the regular time. Open at 9:30 Eastern, and we close at 1 Eastern. So we basically got a half day, because so really, you've kind of got the morning. You get from about 9:30 to 11:30 or so. There will be half decent action, probably kind of weird action, because the senior people just won't be, in the offices, right? And the senior people in the hedge funds and the institutional desks. It's all going to be junior people, and so the action will be a little weird compared to what you're used to, and also the volume will be really low. So there will be probably increased volatility. You could see large sudden moves. Probably be really cool if you're a really nimble day trader. And you like big, almost unexpected moves. Probably work really well for you, but for most of us, it's going to be kind of a bit of a weird day. So anyway, so I'm not going to go really deep into the markets, or we'll take a look at some of the stuff we've been watching, but I'll save the really in-depth stuff for the weekend video. And then today we can concentrate more on getting into everybody's tickers. So that being said, let's just do a real quick overview of these markets, starting with the S&P 500, of course. So here we are, the SPY ETF. You can see we're have finally broken out of this bull flag. This action in the last 2 or 3 weeks, this price action here, this looks more like a Chinese internet stock than the S&P 500 index. It's just choppy and gappy and up and down and all over the place. It's really kind of messy. But I think we are starting to now resolve, obviously, to the upside a little bit. The last couple of days, anyway, have broken out of this bull flag, and it looked like we're going to go and attack some resistance. We've got that declining 200-day moving average right overhead. We've got a fairly strong resistance level at 407, and we've got this target at 405. We've got this target from this head and shoulders bottom. Now, that doesn't mean, we're going to turn around there. Indices go up. So, the target is something, a place where it probably takes a break, like it kind of did a week ago, and then goes and breaks through it. That's what I expect to happen. I think we're set up nicely here for a move higher, and with the market rallying after the Fed minutes today, or mostly rallying after the Fed minutes today, things look good. I think that looking at those minutes, I think the big takeaway for me was that it confirmed rumors that there's a little bit of dissent amongst the Fed. Usually they're quite unanimous. Usually they're really all on the same page, but you can tell there was a lot of discussion about slowing rates down. That's not what Powell has been telling us, right? And after the last Fed meeting, we had angry Powell. And he did not want to see the market rallying, and he was trying to convince us that no, it's going to be 70-point rate hikes continuing forward. But other Fed members have been coming out and saying no, 50 basis points. So I think it's pretty much a done deal that it's going to be 50 basis points at the next meeting. The next meeting is December 14th. And let's bring in our FedWatch tool. And we can see we have a 76% chance probability of a 50 basis point rate hike and a 24% chance of a 75 basis point rate hike. I'm actually surprised that the 75 basis point probability is that high. That does surprise me a fair bit. I would have thought that it'd be lower, and it really hasn't changed since yesterday. And if we look at this here, our 50 basis point rate hike has actually come down from 85% a week ago. That's quite interesting. So yeah, it should be, what we got, 3 weeks till the next meeting. So lots of time for this to change, for the market to absorb more of this. But yeah, I think it's pretty much a done deal that next rate hike is going to be 50 basis points. And the market maybe started to price that in a little bit today. But again, with with all the senior people in the institutional traders kind of going home early for the long weekend, that price or the action we had out of that minutes release wasn't really what you'd normally expect. So here we're looking at a 5-minute chart of the S&P 500, and you can see obviously this is 2 o'clock when the minutes were released, and we chopped around a lot afterwards, but we did continue to move up, and we continue to move up in the after hours as well. So I expect to see more of this upward type action on Friday and in the next week as well. Okay. One thing to think about on Friday, for Friday, Powell is got a speech. He's doing some economic event on November 30th. So people will be thinking about that a little bit, and seeing which Jay Powell are we going to see the next time he makes an appearance. All right, let's move on to. Yeah, I promised I'd be quick through all this, didn't I? Well, we had to cover that. That was an important event today. So looking at the Qs, another bull flag we are breaking out of, so that's good to see. Really, not quite as strong, I don't think, as some of the other indices, but trying to get there, right? IWM, the Russell 2000 small caps. This has been really messy as well the last few weeks. I didn't even draw the flag on that because it was such a mess, so loose in here. And that's not the way you want to see your flags. You don't want to see loose flags. But we've got a nice upward channel that we've been in now for close to 2 months. We are coming into resistance. But I think that, all else being equal, once we get through this declining 200-day moving average, go attack this resistance, I think we've got a really good shot of moving higher from here. Let's take at the volatility index. Look at this. I mean, just this drop in the last 3 days, let's go back to SPY really quick, right? I mean, take a look at the SPY. We've had a nice move. It's been a nice 2-day move, but this hasn't been huge or anything like that. But when you take a look at the VIX, you would think that we've seen a huge move up in the SPY or, in the indices in general. And that's not really what we've seen. But this is a big drop. We're coming right down to this important 20 level. We closed this gap from back in here, so that's good to see. But it does make me wonder a little bit, is the market starting to get a little bit complacent? Is sentiment getting a little too bullish maybe? And that's what VIX is telling me anyway. A little bit of complacency going on, and that's actually that scares me a little bit. That is reason for concern. Let's take a look at the 10-year yield. This is behaving mostly normally. Look how tight, the action in here is getting really tight, though, or was getting really tight. We talked on the weekend about this bear flag, and that is breaking out to the downside like it's supposed to. Next stop on this is probably in the 350 to 360 level. So yeah, really nice to see this rolling over. Good for equities, obviously. Let's take a look at the dollar index really quick. This, you know, drew kind of a messy bear flag here. Haven't drawn that in, but you know, you guys can see this bear flag, and it is broken out to the downside. Now we've got the rising 200-day moving average below, and that's right at a support level, an area we came down and rejected from not too long ago, you know, just over a week ago. So it'll be interesting to see what happens here. You know, will this act as support? Are we going to break through that? I mean, you know, the chart's technical analysis says that we should expect to see some support here in around 105. Where to next? Let's take a look at gold. Gold is a little interesting. I actually picked up a materials ETF today. Started a small position in that. It does get some lift from the metals and also for some other industrial materials in there. So gold had a really nice move up, came up into that 1800 level, rolled over. It's a little deep, you know, for a bull flag. It's a little flaggish, but a little deep for my liking. But we came down to the 100-day and the 21-day moving average and had a nice reversal candle off that yesterday. Yesterday? No, sorry, this is today's candle. This is tomorrow's candle. This is the futures candles, right? So this little thing here that we see is actually for tomorrow. So potential reversal here, you know, right where it should have. So that's interesting to me. The other metals, not so much. Silver, kind of similar. Copper, not really cooperating just yet, but I would expect this to follow along shortly. Let's see. Let's take a look at oil. So oil, we had a couple days ago, we had a nice reversal after it looked like it was really going to kind of break down. Notice how, you know, we had drawn in this channel, and, you know, from when, I mean, when did this channel start, right? It started back in June. Left that drawing on there and take a look. When we came down on, I think this was Friday. Oh no, sorry, this was Monday. When we, you know, when we puked here, it came right down to that the upper trend line of that channel and bounced really nicely. That looked like a really nice reversal candle, and I was expecting that this would go much higher from here. Worries me that today we kind of rolled over like this, but we're still finding support at this pivot level here. So, you know, we've still got a chance on oil. The thesis is still more or less intact. It's just come down a lot more than I expected. But I do expect that, you know, they're going to be starting to, they're going to have to start buying oil into the SPR soon. In today's, there was still more drawdown out of the SPR in this week's report. So, but I do think we'll see that stop soon, and then, you know, that oil can move back up. I think that also there's been a bit of a rotation out of oil, out of crude oil perhaps, and into natural gas. This is starting to really starting to accelerate to the upside now. You know, we had that bounce. You know, pretty decent, a little bit of a loosey sort of consolidation, but you can see we've broken out of that now for the last 3 days and moving up strongly. We haven't been up at this level since, you know, the decline really started here back in September. So, you know, 2 months since we've been up here. So I think we can expect more upside out of here, but wouldn't be surprised to see a little bit of a pause here for a couple of days before moving up some more. XLE, the energy sector ETFs, hanging in nicely. Messy up in here though. This is kind of toppy looking action, but you've also got some nice reversal candles in here, like this one from Monday. You know, if this is going to make new highs, it's got to get out and do that soon. What else should we look at? Let's look at 10. We're going to look at end phase later on. So TAN is interesting. That its volatility is declining here, which is good to see. It's becoming a little more behaved, I think, because this sector tends to be really volatile. But you can see that we've got a little contraction going on here, a little bit of a pennant forming, and this will be a continuation pattern here. So we expect to see this break to the upside and continue higher. And I wouldn't be surprised if the next leg runs all the way up to either this resistance that goes way back, back into last year, and that would be up around, or sorry, last year, up around 92. You know, maybe it stalls out at this level here. But this is something we'll be watching for, the breakout of this, and you know that will be obviously be good for some of the solar names. We'll look at a couple of those names. Actually, well, let's look at FSLR right now. So this this broke out of this really nice tight little consolidation here. So we had a bit of a breakout, and it paused into a 3-day consolidation that just got tighter and tighter and tighter. I bought the breakout of that today. With a super tight stop, and you can see where my stop is compared to the daily candle here. I was fine. I was fine if this trade was a scalp. That I was fine with that. And if I get stopped out of this, you know, I still make a small profit. If I stay in, that's great because I do think that this is going to run higher, but I'm not that committed to it. Okay. What else should we look at? None of this, you know, there aren't that many terribly interesting sectors. Industrials breaking out. We had a nice little pause here. It looked like, you know, it fell right out of the consolidation, went right back in, and paused for 2 days in there, and has broken out. Now this is kind of unconvincing. It's not a big breakout by any stretch of the imagination, but you know, as long as we're above this trend line, no reason to think this won't go higher. Financials, I think, did a similar kind of thing today. Oh no, financials are about to break out of this. Still holding their trend line nicely, and you know, need to break out above this pivot and get going here. Technology wasn't terribly interesting. Communication sector. Looking a little better than the tech sector, actually. We have that bull flag there. We've broken out of that today. Meta was junk. Apple, no good. Amazon, not very good. Netflix might be interesting. So Netflix rolled over, having, you know, a loss of momentum in here, I would call it. Rolled over, but came down to this trend line and the 21-day moving average, and put in a nice reversal, nice hammer candle yesterday on low volume though, and you know, moved up a little bit today. No reason to think this wouldn't go higher, and I think, you know, this has barely moved off of this level. I think that, you know, you could find yourself a play in here. You'd want to play it with a fairly tight stop, maybe a stop below, either below the 21-day moving average or below today's candle. But there should be still plenty of room in this to run up to this target. And I think that, you know, the expectation should be that the next leg goes to this target and then finds fairly stiff resistance right there. So that, you know, I mean, that gets you from 293, you know, up into, you know, 328-ish. That's not a bad move. Google, another one that I played today. So I've been watching this bear flag that I called out over the weekend, and bought the breakout of that today. And again, with a tight size, actually my stop is higher than where this is. My stop on this is also fairly tight. You know, I'm just, with the way that it's nice to see that breakouts are starting to work. The technicals are in a lot of stocks are becoming a lot more behaved than they have been. But it's still hard to trust this market, right? And if this market gives you a profit on some of these swing trades, you've got to take some of it. you know, there's no reason not to take little pieces off fairly quickly and then tighten up your stops. You know, take that money right now when the market gives it to you, but also, you know, try and stay in with a piece. You know, keep a taste on, and because you know, some of these will start to run higher. This market is becoming a lot better behaved. Microsoft is another one, broke out of a bull flag yesterday, and looks like it will be going a little higher, although there's some resistance overhead. Tesla didn't completely fall apart, which is interesting, and had a really strong day today. Big gap up, big gap and go today. So let's see how the how far the Tesla bulls can take this. Can they, you know, maybe this 187-ish level? I think they can get it beyond that, especially if the market's rallying. Maybe the 21-day moving average, or maybe they get it all the way up in this 200 to 206 level. But I don't know. I'm having a hard time being bullish. But this is, you know, this is what the Tesla fans needed to see happen. Semiconductors. Still a little choppy, still under this 200-day moving average. You know, really need to kind of resolve to the upside here, but much like, you know, the indices, they look ready to try and resolve higher. NVIDIA was one of the better looking ones in this space. I really like, so we have this move up, we pull back, we come right down to support, and also at that support level, we've got the 100-day moving average, the 21-day moving average, and it bounces right there. Technically perfect, right? This is exactly what you want to see in a well-behaved stock. So yeah, this is nice. Oh, healthcare. We should look at that because that also broke out. That is broken out now. And starting to move higher. And this was a really, you know, sort of strong resistance area in here that it's now broken out of. So that's good to see. If you see any, you know, you might want to look in that healthcare sector, see if you find anything interesting. I don't want to look at the defenses. They're kind of boring. We have been, for as far as some of the setups we've been looking at, we were watching Schwab. It's kind of broken out of the space. Very unconvincing, though, isn't it? You know, look at the selling wicks on these candles. It's really not kind of going anywhere. So, you know, if you're playing this breakout, be really careful. You know, tighten your stop right up. Don't let this turn into a loser. Monster had a really nice breakout. Gone into this one on Monday. Called this out on the Discord on Monday morning when it was going. Let everybody know that I went in there, and I've been tightening my stop up along the way. I took a piece off when this had a little bit of an intraday pullback into VWAP. It didn't or it got, yeah, it just broke. Actually, I'll show you exactly where I took some off there. VWAP. So I decided in here. When it pulled back in here the first time, it's like, okay, if we come up again and we come back and test VWAP again, if it breaks below VWAP, I'm out. And so I put a stop on a third of the position. I put a stop right below VWAP. And, you know, sure enough, the next time it came back down there and tested that, it did come down quite a bit. And then it just went sideways the rest of the day. So I'm happy to be at a third of that. I'm also quite happy that I still have 2/3 of my position in there, because I do think this is going higher. I think we can, you know, see, you know, 112 to 115 out of this fairly easily. But I am glad to have taken some profit. Canadian Solar is another setup that we've been watching. You know, this has got this base on base action. And, you know, if we're going to see more upside out of these solars, this is one of the ones that could make a nice move. We've been watching Boeing as well. Boeing in a nice bull flag. And it kind of broke out of that today. Didn't quite hit my target entry level yet. Might do that on Friday. And if this, you know, I would even buy a small gap on this. You know, hoping for a gap and go, but this is a nice looking flag here. This is really nice price action inside the flag. This really looks ready to go. Global Foundries, still kind of having a bit of a trouble getting out of here. It got a little messy in there, but it has tightened up. So this could be ready to go. We were earlier in the week, I think it was Monday morning, we were looking for a cup and handle that had formed on the 15-minute chart on Friday, and that didn't play out at all. And it's really just kind of gone sideways since then. But yeah, keep an eye on this one because this could make a strong move. Google, oh, I already mentioned Google. DraftKings was going to short this, didn't end up shorting it, you know, because just missed it. Had too many other trades going on, you know, when this presented itself. So now we're coming back up into this area where it has always kind of failed from. But you know, if this was a failure, if this was a 2-day failure, it kind of put in a bit of a reversal candle, and it's got nice candles on the way back up. So maybe this pattern has failed now. You know, the pattern that was calling out a short on this, because it barely pulled back at all. You can see every other time it's retreated off of this 200-day moving average in this trend line. It's moved down a lot. That didn't happen this time. So this could, I wouldn't be surprised actually if we broke out of here and broke above this 200-day moving average. I made a pretty strong move to the upside. Not convinced about enough of that to actually play it, but wouldn't surprise me to see that. Okay, I've got one stock to look at here, end phase for brownies. Why don't I bring this over and we can see what he was. Let's take a look at this question here. So yeah, I kind of started when Disguise This Guy asked if there's any reason for end phase to go up as well. He was talking about with oil. And my response was, yeah, sometimes there's a weak correlation between oil and the solars. The interesting thing is, you know, sometimes the solars do go up with oil, and then other times, other times they're not correlated at all. They're actually inversely correlated. And I think what happens is sometimes there's rotation between oil and the solars, and vice versa. So that's why I call it a weak correlation, but it is there sometimes, and it's definitely worth watching out for. So then Brownie's, you know, responded there. He says he's kind of worried about whether end phase will be able to sustain its growth when oil prices drop. I think that's a valid concern. Because, you know, sometimes there is an inverse correlation, or sorry, I mean, that would be a case of, you know, the oil prices are coming down, and because solar is, you know, more capital intensive, you know, to get solar going, you know, there is a concern that people stop their solar projects when other energy forms of energy are cheap. And there's a lot of truth in that. So, you know, there's good reason to be concerned about that. Then he goes on to say, I think the EU is traumatized enough by Russia that they want to push for self-sustainability. Absolutely, totally agree with that. But solar panels is still a middle to middle upper class kind of thing due to the big upfront financing. Yeah, I would think I would have to agree with that too. You know, if you're having trouble putting food on the table, you know, the last thing you're thinking about is reducing your energy bill by a little bit by having to spend a ton of money up front. So, and this is also a concern. I don't think he mentioned, you know, this being a concern in a recession, but if you're concerned about a recession, I don't think that you're going to be wanting to invest a lot of money into a big solar project on your house. I think that's the kind of thing you do when the economy's going well. So we could see a little bit of slowdown in that space, I think. What will be the way forward for stop losses during each earnings? Okay. Yeah, I mean, I don't think you want to actually have stop losses in the market during earnings. I think that if you're really concerned about earnings, that maybe you want to trim a little bit before earnings. and then watch and see how the stock reacts to earnings. If you get a big move down and it's followed the next day by another move down, then maybe it's time to invoke a mental stop and say, okay, here, look at it. I gotta trim some more of this. Goes on to say, planning to exit some percentage of it to if it drops below the 200-day moving average. That's a long way down from here. Okay, well, we'll get into that a little bit deeper in a sec. And some predicted opening of China may push up the price of oil. I would say reopening in China will absolutely, without a doubt, push up the price of oil. One of the reasons that oil has been coming down lately is because of the way COVID is expanding in China. And there's a lot of concerns there about their economy slowing and everything because of COVID. All right, so let's get into this chart a little bit more here, and with a thought to where do you put stops. So he's saying he would stop out around the 200-day moving average. Oh, and you know what? I know that he also uses an exponential moving average for his 200-day. That's fine for him. If that's what works for him, that's great. I don't like it. I think that for your slower moving averages, anything from 50 on up, 50 days on up should be a simple moving average, but that's fine. So just for fun here, let's see where is that hiding? Oh, it must be hiding behind here. Yep. Okay. Let's turn this to exponential and see what that looks like. Okay, so yeah, you notice how that moves up a little bit. So yeah, this is an area I can see why he's using that. I mean, this whole area down here, starting from about to where the exponential moving average, 200-day moving average is 240, all the way down into sort of 220. Anything below that, I think, gets really scary. I would kind of also think that you might want to look at the 100-day simple moving average and this 272 level as maybe an area where you might trim a little bit off if we get below there. I mean, you can see how quickly it moved last time when we got below there. I think if we get below that again, or maybe even the 50-day moving average, I think people are going to get a little scared, and you're going to see some acceleration to the downside. So that might be a thought for you, is maybe tighten up a stop on just a small piece of it, with more aggressive stops, taking bigger chunks off as, like you said, get into that 200-day moving average, get into below this pivot here and below this gap. If we do end up going below the gap here. So another thing you could do is, draw a trend line. It's kind of, the trend line on this is going to be a little messy. We're going to have to cut through some prices, I think. But I think in this case, that's okay. I kind of like, I like that trend line right there. Yeah, so from this low back over here, this double bottom right here, this tweezer kind of bottom, and then we want to attach that onto the low of that consolidation, or here, that little, yeah, that's the one right there. So yeah, so you see that, do you see that, brownies? We've got, when is this? January 28th. Started right there. Take a look at these two lows here, this tweezer bottom right here, back in June, and that gives you a nice trend line. That may be another place where you want to think about trimming a little bit off if it breaks below that trend line. But I would require, if I was going to use this trend line, I would require a close or two below that trend line before I actually stopped out of it. Because you can see sometimes you cut through that, right? Here's a day where we went through there and went right back up. I mean, here we had a couple of days, a couple of closes below there before it went back up. So you probably want to use that as a bit of a heads up. maybe not a hard stop, and watch the price action and see if it looks like it might bounce from there. So that's, that's what I would look for with stops. Now, I actually think that this is going higher. I mean, I like this space. I think this space is going higher. And I think this is poised for a breakout here. I think we need to put in maybe a little bit more consolidation in here, tighten this up a little bit in here before it goes. It might not do what I want, but you guys know what I like. I like to see a nice little tight consolidation like that and then go. So yeah, I don't think you need to worry too much about downside, except maybe on the next earnings. When is there? Well, I guess the next earnings is probably January, I suppose, or would that be February? No, it'd be January, end of January. Yeah, I think there's still lots more upside in here. All right, so hopefully that was helpful. If you have any questions on that, Brownies, go ahead and shoot me questions in the Discord, of course. All right, so I think now we are going to move on and we're going to take a look at everybody's tickers. You guys know the deal. I see that Casey Dots has typed one into the chat, so that's totally cool. So we'll start there, but for everybody else, if you want to, after I'm done with Casey Dots ticker, then you can either unmute and we can chat, or you can type it into the chat and just let me know what you're thinking about. So Casey Dots says, I have a small position in TAP. That's Budweiser, right? Small profit. Do you see anything interesting on the chart? Looks like it may have a hard time going higher to me. Also wanted to look at ULTA, Ulta Beauty. Close to resistance. If it breaks above, could it break out? Projecting good earnings on December 1. Okay, so earnings coming up fairly soon on that one. All right, so we'll start with TAP. Oops, I said Budweiser. Yeah, because Budweiser is Bud, right? B-U-D. So this is Molson Coors. Okay, yeah, this is, wow, this has been a nice move off this bottom. Look at that. Nice double bottom here. Our earnings. Interesting, obviously there was something about earnings that they didn't like. Unless there was some macro event on that day. That wasn't November 1. That wasn't that CPI day, was it? No, it wouldn't have been. Yeah, so this must have been on their earnings. I mean, they sold it hard on that and they bought it right back. And it's been pretty much rallying fairly solid ever since. Interesting. Okay, so got a small profit. See the interest in the chart. Yeah, I mean, it is going to be coming into some resistance here, and it is probably getting stretched on this move. But if you can withstand a small pullback, which would be normal and healthy, this does look like it's probably going to go higher. I mean, this is a real change of character. What's happened in the last month and a half. All right, so let's draw some lines on this. Let's start with the resistance area that really concerns me, and it kind of centers off of this here. Maybe actually come down to here. This is a zone in here. So say from 57 to 57, 57.5, 58 in there is an area you really got to watch out for. There's probably some minor resistance right near where we're at now, but it's going to be pretty minor. And if the market is rallying, this stock should have no problem getting through that level. So I think that you should watch for a consolidation. Either it goes up into this area and consolidates, which would be awesome. I mean, that would be super cool. Or it goes up into there and pulls back. But it certainly looks like it's going up into here. Whether it just rolls over right away and pulls back. If it did that, if it rolled over and started pulling back fairly hard, it probably comes down fairly low here into the 53 or 51.5 area. But if this stock is strong, it should go up here and consolidate a little bit first, kind of like it did here. But I think it's much more healthy right now, so it shouldn't break down like that. But if it just goes right up and instantly pulls back, I think you're going to see a steep move. One more support area comes off. Yeah, so this is a zone. If there's a hard pullback, these two support areas is where you should look. To. And we've got we've got a decent trend line in here, but it's getting steep. You notice how this is really steepening here. So again, wouldn't be a surprise at all to see this take a rest, because this trend line is just too steep. It's not healthy when it gets this steep, and it's steepened even more than that, actually, right? I mean, if you go from this point, now we're almost straight up. That's not sustainable. So this does need to pause or pull back a little bit. So if it went up here and went sideways a bit, paused up here, by the time it reached this trend line, then maybe it's ready to break out again. If it rolled over or started, pulling back more slowly, for instance, maybe it comes down into this trend line and then bounces off that. Yeah, for now, it has moved up a lot. It's getting a little stretched, and this trend is getting a little steep. So we should watch for, at the very least, a pause. But it looks nice and healthy, and especially the way it came off the bottom with the double bottom here. You get this nice W, and then you get the breakout from that. You get a basically a one-day blip. It's looking good. So this is something I would try and stay in, but maybe take some profit up in here. Watch for a little bit of pullback in here. If you see any sign of slowing momentum from here on, take some profit off, but also try and hang on to a piece if that suits your risk tolerance. So hopefully that was helpful for you. Let me know if there's any more questions on that one. And let's take a look at Ulta Beauty. So I think that, I'm certainly no expert on this, but I think that these beauty supply stocks are kind of recession proof. Because I would think that women, and if there's any women here, please correct me if I'm wrong. But I think that makeup is kind of one of the last things you're going to want to give up on if you're tightening things up for during a recession. So I think that stocks like this do become kind of recession proof. And while this has been a little choppy, messy, you can see that we've been in a massive uptrend here ever since COVID. We haven't seen the pullback in this that we've seen in most other stocks, which is really interesting. They must have growth. I actually want to look at here. Let me bring Stock and Lock in here, because I want to look at some of the fundamentals on this. I want to see. I want to see what the PE is, because it looks like the PE on this should still be fairly high, right? 20. Okay, that's not too bad, I guess. And for PE of 20. All right, that's not. I expected that to be higher. How's their free cash flow? Price free cash flow is not great. should be at 4%, earnings yield 5%. That's not bad. Price to sales is only 2.4. Their price to book below is kind of high. Interesting. Yeah, valuation seems reasonable, and margins are interesting. That only says average. These margins look okay. Growth is good. Really good growth stats here, but free cash flow decreasing, book value decreasing, tangible decreasing. Okay, that's not ideal. Their financial health is really good. Current ratio is above 1, as we like to see. Look at these returns. Yeah, these are some solid numbers in their returns here. Interesting. I mean, yeah, I mean, it looks like a pretty decent stock. All right, so yeah, fundamentally sound from the looks of it. Really choppy, messy though. So yeah, I mean, anytime you see this come into resistance, it's totally reasonable to expect this to pull back. You know, that's what this stock does, right? So yeah, if you're, you don't say here if you're in it or not. Yeah, if it breaks out, I mean, could it go more? I don't know. This is probably not a breakout I'd want to play, because it's run so far and because it clearly is choppy and pulls back all the time from resistance. So yeah, I don't like it. I don't like it for a breakout play. I suspect that any breakout is going to fail fairly quickly. But let's get some lines on there anyway. But you know, buying this, if you can find a place to get this, even though, see, the problem is this is messy out the downside too. This is a hard one to enter, because even though it's in a nice uptrend, the trend itself is messy. You know, you could draw a trend line, you know, say from this low across that low. You know, that would be a solid area to buy. Casey Doss says in at 390. Okay. Where's 390? Oh, okay, yeah. All right. Well, that's a good place to be in from. Lots of support. You know, you've got tons of support on the way down there, right? All the moving averages, and you know, you've got the really big volume node in that area as well. So I don't think you should worry about this error really coming back to 390 if it rolls over from here, but I wouldn't be surprised to see it roll over from here. You know, coming into the 410 area, that seems reasonable. So if you can't handle the, you know, a move from 450 down to 410, you might want to be selling a little bit up here, take a little bit of profit off, and then, you know, this stock would almost definitely, given its previous price action, almost definitely give you a chance to get back in again, right? So yeah, there you go. Hopefully that was helpful. I think for Marion.
And you don't have to do all of it.
Okay. Yeah, we'll take a look at, let's start with Amazon. Yeah, we usually look at the fangs, or I didn't look at all of the fangs just because I knew that Amazon was just not looking terribly wonderful. You know, it had a really nice bounce a few weeks ago, and it's just been giving it all back right now. It might be turning up here. So,
what I was thinking that, what do you think about it moving up to the 100?
About it turning and moving up to 100?
Yeah. That price point there where the first resistance is, and then just
so there's not much to go on right now, right? We've got 2 days of basically you know, potential reversal, right? We have that hammer candle, which is nice to see there, right? After we move down, you get a hammer, and then you've got follow through on it today. So that's great. That's awesome. Now, if you know, if this is going to move back up, I mean, let's just kind of like, let's draw some trend lines on this and see what would happen if we turn that into a channel. Because, you know, it's not unreasonable to expect that maybe a channel forms off of the top of that. So if this really is a turn, if this is the beginning of an uptrend, and, you know, I am really speculating here, right? Then there's no reason you couldn't expect to see this go back up into around 100 and maybe even beyond 100 before it rolls over again. I think a reasonable pace for this to move up at would be something like this. And then that gets you there before it rolls over again and comes down into here. And, you know, you get that sort of thing going on, right? If this is going to start an uptrend, I think this is sort of the kind of thing that you could expect to see. So that gets you to that 100. If something bad happens in the market, for instance, the market doesn't like what Powell has to say on the 30th, or, you know, what's the date here? Okay, so this is before the next Fed meeting even. Okay. You know, if this rolls over from here and breaks this trend line, then you're looking at a test of this 85 again, and we really don't even want to think about what would happen if it breaks this 85. Things are going to get really ugly if it breaks that 85. You do not want to be in that stock. You've got to stop out of this thing. Look how important this 85 level is. You know, because 85 breaks, then you're down to 73, and then 73 is minor. If 73 breaks, then you're looking at 60. So yeah, you need to see this go up, and you've got to make sure you've got a stop in place on this one. Does that make sense, Marion?
Yeah.
Okay.
But so would you say to play this by buying the stock or doing an option because of the?
I wouldn't play this.
Okay.
No, there's way better places to be. Yeah, go. I know you like catching the bottom, and I don't. I don't see it. I'm not seeing a really good bottom setup in this. I'm seeing what is potential. There is some potential in this, but it's not strong. It's not. It doesn't scream out at me to go and buy it, right? So yeah, but I mean, if you were gonna buy this would probably be a really good time to buy calls. Let's take a look and see. Whoops. Sorry, I'm gonna take a look and see what the IV on this looks like. The implied volatility on these calls. Moderate. Yeah, okay. Yeah, so I mean, calls are kind of, you know, middle of their price range. They're not expensive right now. They're not cheap either. And, you know, if you can find some cheap calls, because if this is going to move, it should move pretty nicely. You know, I mean, from 94, where we're at now, 94 to 100 to 110. I mean, that's a decent move. So if you were to buy, you know, $100 calls, I bet you they're not that expensive. If you buy, you know, if you can get yourself about a month, maybe. Just looking that up real quick for you here. I mean, was there a particular strike that you had in mind?
No, I was thinking of actually buying the stock itself.
Okay.
I already have some, so I could add to my position because of that. This, and then ride it up to fill in the gap that you have over there.
Yeah, yeah.
Then get out most of it, or those whatever.
Yeah, you know, I mean, if the market's going to rally, then this is probably going to go. I just, it's just such a weak stock. It just.
Or just put it tight.
You could just as easily roll right over and go to 60 as 100, in my opinion.
So
That's
it's
what worries me.
put a stop on there, right? A tight stop.
Super tight stop. You know, either below the low of today or below these two lows.
Okay.
You have no business being in this stock below 90.
All right. Okay.
TDOC. We looked at this last time. I think you were here a few weeks ago. Hasn't
I
done.
think it was LC that we did, but
Oh, okay.
TDOC is given the same type of Amazon.
Yeah. Don't. Definitely do not play this one. This thing is a dog. This is junk. If you're in it, you know, I'm sorry. It's gonna be years before this does anything. It's probably not going broke, but they have some serious work to do. Management just destroyed this company, and they need new management. So until that happens, and maybe even a new board, until that happens, this thing's going nowhere. Sorry, not good news on that one. LC, this one I think has a better chance, but I wouldn't be adding here yet. You know, it's still trying to figure out where it wants to base. It's looking like it wants to base in this area, but it hasn't made up its mind yet. At least this bear flag broke to the upside. So that's up. I guess that happened since the last time we were here, right?
Yeah.
It hadn't broken to the upside yet, had it?
No, and I did not add to the position. So when I saw
Good.
that big jump, I was like, no, I'm not gonna.
No, you can't.
I was hoping that it would pull back down and test that again, but it didn't.
Well, it is now. I mean, it has now, right? Look at. I mean, it came right back to the top of that bear flag, and it looks like it's starting to turn up. But this is another one like Amazon, where this could very easily just roll right over. And if it rolls over, it goes down fast. You know, because it probably shouldn't have come down this far. After breaking to the upside and gapping from this bear flag, right? Because we expect to see that go down from there. That went to the upside, and it couldn't hold. And it's kind of rolled right back down here, and it's retesting this level. So
I feel like it filled that gap that you always draw.
It almost filled that gap, yeah. Yeah, close is well, sorry, no, not this gap here. Yes.
Yeah.
Almost. There's still some of it left. But you know, it may have filled enough of it that it can get going from here, right? So there's still about half of that gap left.
Oh, when you draw it from the body of the candle, not from.
Yeah, I'm drawing from the close of that day, right? Because the gap is from the close to the open.
Okay.
So yeah, because that wick, you know, I mean, yeah, that wick doesn't count as closing that gap.
I've noticed about that is that they will come in the first try, they will come and like test, they won't fill it, and then go up and then come back and then test it again, or then eventually end up filling, or sometimes they don't.
Yeah, and it doesn't have to fill either. Like, I don't think this one's going to fill. I'm going to get rid of some of these lines just to clean this up a little bit here. And that one. Okay. You know, this is nice. This is nice the way it's done. This is not nice enough for me to want to buy it, but this is technically well behaved. It went up, pulled back. It's supported right where it had to. So that's good. You want to see that, but it's below all these moving averages. It's all declining. It's in a downtrend. There's no reason to be going long on this. There really isn't. Because, you know, chances are this just continues to the downside. Anything happens in the market, anything negative happens in the market, and this drops really fast. You know, strong stocks can withstand a little bit of negativity in the market. Weak stocks like this can't. All right, what else we got? Knee might be interesting. Whoops, too many E's in that knee. Oh, come on. All right. See, this one's more my style.
And I don't like playing these ones because I'm like, to me, it's so, I feel like it's so risky, the consolidation, and then I guess it's too advanced for me. I feel like,
I mean, it is, so it's a utility stock. It's not going to move fast. It's going nowhere quickly. You've got to be kind of, it's a stock maybe you want to invest in, but you want to invest in that, probably at a better price for, better price than this. Now, if this were more growthy, if this had more potential to make a nice big move, because, the average daily, the average true range on this, like the daily move we could expect out of this is about 2%. So that's not too bad, right? It's got some volatility. It can make a move, and you can see it has. I really like the way it, the way it put in this double bottom here. That's really nice, and it's made a really nice move ever since then, right? And you can see it put in a nice bull flag, right? Look at that bull flag there. Okay, a little wide. Whoops, let's get that up there where it belongs. Okay, that's a little bit wide. So what are we, 76 to 79? Yeah, $3 on this stock. A little wide for the bull flag, but not bad. And then you can see we broke out the top side of the bull flag. Unfortunately, for anybody who wanted to play that flag, it it gapped up a lot. So let's draw this gap in here. That's all the way from down there, actually, from that close to that open. Okay, it's a really big gap, but we're kind of drawing another flag. This one is much messier. This is not as good here, and it's not giving us a decent setup. When the flag was, if the flag had formed a little better, and it was starting to, this flag was actually looking kind of nice. And then it sort of got wrecked by that day. And then it really, technically, this broke out yesterday. And it was very indecisive. But today, you can see we pulled back to the breakout point of the flag. Let me draw that better. There we go. Pulled right back to the breakout point of the flag and then moved up from there. So I think this one has passed us by. This is not playable from here. It's a little too late. The risk reward on this isn't as good anymore. But playing that flag, we could expect a move up into the 91 area on this.
yeah.
So there.
It has this great habit of always having pullbacks. So I kind of want to keep an eye on it.
It does.
And there's another pullback and try and jump into it.
Yeah. It definitely trades in a big, wide, choppy range. So if you're looking to invest in this, wait for this to pull back, because you're in the middle of this big range, or you could even call all of this a base. This really kind of started basing back here in September of 2020. So yeah, this is nothing going on here right now, but perhaps worth keeping an eye on. What else we got? Baba. Yeah, we're gonna look at Baba.
Let's do it. So the next one is Baba.
Okay, and then we're going to move on to some other people's tickers. Okay, so this is still, this is still in a downtrend. This is another one that was drawing a bear flag, kind of, more of an upward sloping consolidation, but in a downtrend. And, we would have expected that to break out of the downside of this, and it didn't. It broke to the upside. So we're starting to think, okay, maybe this is starting to put in a potential bottom here. Maybe the low is in, but it's only a maybe at this point. This is still, I'm not convinced by any of this. I think that this needs to go sideways from here for quite a while longer. Couple months probably. I would like to see a range in here for, probably into January. I think that would be really healthy for this stock. If it can just settle down, go sideways, and then break out of here, then I think people would start jumping on this. But obviously, we need to see the situation in China improve, and there's a lot of uncertainty in China. So again, this is another one. I think this is a hands-off play for now. I think there's just too much risk. The risk reward on this play is no good. All right, let's move on to Merck for Justin.
Thanks, Kevin. Hopefully we get back to those other tickets.
You're welcome. Keep looking for those plays, right? I know I kind of shot a lot of these down because, you might have thought I would, because these plays are definitely not my style coming off of that. My kind of play is looking for strength and looking for strength to continue, like Merck is doing.
Hey, what's up, Kevin?
All right, so tell me what's going on here, Justin.
Do you want me to show you my chart?
If you want to, yeah.
I mean, we can try. That's why I signed in double, because the other one is my computer, which I don't have a camera for.
Okay, so should I
do the one without the camera? Or
you're gonna share on the one without the camera?
Or no, sorry, yeah, without the camera, right? Because that one's connected to my computer.
Okay. Make co-host. You are now a co-host. I'm going to stop sharing, and you can share.
How do I do that? So I go to share screen. Click that, right?
Yep.
Screen. Let's do screen 3. All right, I can share. All right, you guys see it? Cool. Are we good to go?
Awesome.
Okay. So this is actually one I wanted to share with on this Swing Trades channel, but I just totally forgot about it.
Okay.
I played this, and I just wanted to see like what your thoughts were, because I was jotting down kind of like my thoughts as I went.
Yep.
And I was actually, I could even do this thing, the replay.
Cool.
Kind of cool. So
that is a feature,
yeah.
Because and I used to do this when I was newer. Because it's really easy to look at a chart after everything's happened and go, right. Oh, yeah, I would have done this, I would have done that. When you're looking at what they call the hard right edge, and you don't know what's coming next, what would
exactly you? Right. I mean, you're able to get to that place like emotionally too, like So anyway, so on this day, when it was here, I saw that it tried breaking out above this level one time.
Yeah.
But I didn't play it then. I kind of forgot about it. But it hit my alert, and I just figured this candle didn't look so good, and I watched it for another 3 days. And then here I was like, all right, this is kind of looking kind of cool if it would go up, especially because do we like seeing the moving averages line up? This is like basically the moving averages lined up. Like this is the 200-day, this is the 100-day, this is 21-day, this is the 14-day. Is that a positive sign? Or
yeah, when they're all stacked up on top of each other like that? Absolutely.
Yeah.
Yes.
Okay.
Yeah, totally.
So that's my thinking there. Now the next day goes by, or next couple of days go by, and it breaks out here.
Yeah.
So here I'm wondering, is this considered the breakout, or is above this candle, this wick right here, considered a better entry? You know what I mean?
Well, I think so that the wick on that green, that Gridstone doji,
yeah,
that wick is too high. You're giving up too much by then. I would actually argue that go to the day before the breakout. Go to the big red candle day and put your cursor on the wick, the top of the wick of that one.
Right here?
Back one more day.
Back one more.
That was the one, yeah. So maybe draw a little line or just put your cursor there. We can see what that level is. Right on that wick.
Let me see. I'll put a line right now. Oops. I switched channels. Sorry, one sec, you guys. Still new to this. All right, sorry. Let's go back to this candle you said?
The red one, yeah. The big
Okay.
red one.
All right, and then I'm gonna put a line here.
Yes, that's it. Yeah, I just want to, because I want to see that level.
Okay.
Or I want you to see that level.
Got it. Yeah. Okay. So I'm thinking. I'm going. Boom, boom.
It does that, and it does that. Now, okay. So notice how I guess we should actually back up. We should look at these one at a time. I'll explain what I'm seeing here to you. So you have that. So you got the big red day, big red down day. Then you've got the big green day, and that's a nice reversal. And it is supported on your. I think you said it was 14-day moving average, the yellow one.
No, the blue. Oh yeah, sorry, 14-day moving average.
So it had supported there. That's all great. So then the next day it can't really go anywhere. But you notice how the top of that wick is perfectly aligned with the top of the wick from the big red down day. And then the following day after that, that green candle, its wick topped out there. So now that's your level.
Got it. Okay.
Right? You can get in early there, and you can put your stop below that little, that candle is almost a doji, right? The little green one.
Yeah.
You've got really tight risk reward there. You can go in now. You can get in a little early. You can get in ahead of other people. And if you were to go intraday chart on this and look at the green breakout candle, I bet you will see whatever level that is. You'll see a lot of intraday price action at that level.
Okay.
Like you probably see a big green candle start right there, intraday.
Okay. Yeah, I mean, I was definitely considering buying there, but I don't know. I just wasn't sure, and I ended up. Let me look. I wrote it down. I ended up adding my position. I think so. I have my position right at this white line right here.
Okay.
And then I'm thinking, all right, I feel like in hindsight, I'm like, that's a little late.
Yeah.
But I mean, I did it anyways. And then I'll even show you if this is the 5-minute chart, which by the way, I don't know if TradingView is like if you're, when I'm using TradingView, I notice it like if I go from the day to the 5-minute chart,
yeah,
it's like smushes it and I have to stretch it out every time.
Down to the bottom right-hand corner of your chart where it says auto.
Yeah. Oh, click that.
Oh, okay. You've got okay, go to your settings, your chart settings up in there. Yes. Where is it? Scales.
Scales down here.
Scale. Oh, no. See the one that says indicators and financial values?
Right here.
Yeah, turn that off and see if, no, that didn't do it.
Okay.
There's a setting in here. So what's happening is you've got an indicator in there.
Right.
So it's scaling to the indicators, not to price.
Oh.
You want to find the setting. I'm not exactly sure where it is. It's in there somewhere, but you want to just scale to price.
Okay.
Not to the indicators, because you don't care. But if an indicator goes off the screen, that doesn't matter, right?
No. Yeah. Okay, I'll try that. Thank you, because that's super annoying when you're going through a bunch of different things. All right, cool. So, well, I'll show you where I entered, which I don't know if you noticed, I put my VWAP up because I went back and watched the video. So this is pretty much set like yours, and I was trying to figure when I enter stocks, I'm trying to be more mindful of like the intraday moves.
Yeah.
So it bounced off of this this dark blue VWAP, which is the one that starts all the way at 430.
Yep.
And I buy it right here. on like the candle right after it.
Okay.
But anyways, so I'm here now, and what's it on? All right, let me just go back to the day. Oops. And then actually the next morning, I bought right on this bottom of this wick right here.
Okay.
But I made a mistake. Because this isn't connected to my portfolio because I'm using TD Ameritrade, and TD Ameritrade can't connect to TradingView.
Okay.
And anyways, I put a market order instead of a limit order, and it bought like the very high, which is like 105. So it brought my cost basis to 104. So now I'm up here.
You got a bad fill in Merck?
Yeah. Well, because I don't know what happened. I wanted to enter it. I mean, I could go back to the 5-minute chart. I'll show you.
Because I would think that this does enough volume that it would be hard to get a bad entry, but with a market order, yeah, maybe not.
Yeah. So I bought right in the top of this candle.
Okay.
Or actually, sorry. But anyways, yeah. So that's where I'm at right now. I'm oops. So I'm sitting here with basically my full position.
Yeah.
And there you go. And this brings us to today. I feel like it kind of stalled out a bit, but it held pretty good up top. And I'm just trying to figure out, what do you think so this is the 5-day, or this is the 5-minute chart?
Okay.
Yeah. I mean, what do you think about, it pretty much just dances around the VWAP for the whole day, and I don't really know what to think of that,
Well, I mean, it's just going sideways, right? It's completely lost its momentum.
Yeah.
A little scary because, you don't know. It's really hard to tell where it's going to go next after it does that, right?
Right.
And you haven't moved that far from your entry yet.
Yeah.
It's kind of, you're not in a place where what do you got? I mean, you got $2 sitting there.
Yeah.
So it's almost not worth taking it.
Yeah.
But it's also if this pulls back, how far does it come back? And it wouldn't surprise me if it came back to 102.
Yeah.
It wouldn't surprise me if it came back that red candle after the gravestone doji.
Yeah.
Surprised me if it came back and tested the top of that one.
Oh.
So on
this one?
No, much farther back, another week back.
Oh, okay.
After the gravestone doji.
Oh, this one.
That one.
Right.
Yeah, it wouldn't surprise me if it came back to that level to test.
Right. Also, another thing too, this goes back to last week. It is above the Bollinger Band, which I put on my chart for a couple of weeks, or since the last lesson, and I actually really like the Bollinger Bands. The exaggerated shapes.
Yes.
Is I don't know. It helps me a little bit more than the Keltner channels, I think.
Good.
Yeah.
Yeah, use it then. I'm totally all for people experimenting with things. It's I show you guys stuff that works for me, right? But I mean, that's stuff that works for me. And I have also switched back to Bollingers, and I think I'm in to stay there. I have the charts I watch the markets and everything on. I still left the Keltners on those, on all the indices and everything. But for the other ones, for my individual stock charts, I think the Bollingers are going to work for me again. So that's awesome. So I mean, so you can see, things are kind of telling you that this is a little overbought. You can see there's a little bit of an RSI divergence going on here. Have you noticed that?
Yeah. That's the next thing I was going to bring up, actually.
So this is not a trade. If I was in this, I would definitely not be holding this into a loss.
Yeah.
I would probably at this point stop out at break even, or I would try and stop out with a little bit of profit. But from here, you know, it's kind of like, well, I mean, if it just goes sideways from here, that's fine. If, you know, if it came down to like where my entry was, that would be okay, but I wouldn't want it to get below there.
Yeah.
So yeah, you're in a bit of a tough spot, I think, with this being indecisive like this. And then with Friday coming and a part day and potential volatility, if we gap up on Friday, you'll be fine. If the market's going up, Merck is going to go up.
Okay.
You know, so this won't be a problem unless there's unless some catalyst comes along, you know, specific to Merck, right? But you know, if there's any sort of pullback in the market, I think that, you know, you're going to see this pullback.
Okay, cool. Well, thank you. And also, by the way, Celsius. Oh my God, I was heartbroken when I saw it this morning. I was like, well, there you go.
They had news though, right?
They did. Yeah.
It's
you
really
know, I'm thinking for the future, I could have very much put like my stop here. You know, I think I was a little conservative with it. And by the end of the day, I should have waited till the end of the day to sell it, because it actually ended up recovering like this pretty good.
That's one of the reasons I don't like having stops. I don't like having stop orders in with my broker. I mean, I had a mental stop on this one, but I got too scared. I should, like, for the future, maybe I should just. What does that day look like on a 5-minute chart?
Okay, let's go back. I wish I showed exactly where I sold it, but I think it was definitely. I think I sold it right here, like halfway through the day, because I figured, it came back a bit.
Yeah.
And then I sold it here, and then I was like, and then, you know, for the next 30 minutes, I was like, all right, that was the right choice. And then I just watched it go.
It put in a nice double bottom on the 5-minute chart.
Yeah. I was actually considering jumping back in.
Of course, they started buying it too after that double bottom, right? You can see where you see. Look at that as a W, okay, and then look at the level in the middle of the W, and you draw your line there. And you draw your line across there, and once you break out of that again, that's your buy on that pattern, right? And you see that's where they started buying it pretty much, or just slightly above that is where they really started buying it.
So you're saying if I sold here, you think I could have bought back in right here?
You could have bought back in, yeah.
Okay. Yeah.
Either above the W, or if you go back earlier in the day, that consolidation range from early in the day.
Oh, okay.
So what is that? 90.50 is the level.
Right here? Or right here?
Up there.
Yeah.
So that is the level that once it goes above that later, it's actually a little lower than that. If you look at the other price action from earlier.
Okay.
Yeah, so
from what do you mean earlier? Like earlier in the day?
Just earlier in the day, like 20 minutes before that. There. See those 3 candles?
Yeah.
Yeah, that's a good level there. And it kind of, you know, so it tried to break out of that, you know, failed but once it got back above that level later in the day, then it really started to go.
Yeah, it's true.
Somewhere in that level is right where you could have gotten in with confidence. It got back above VWAP.
Yeah, I should have
that level early in the day. But I can see why you were concerned.
Yeah.
This opened and just puked, right? Yeah. I'm kind of surprised you didn't puke it out on that.
I should have. No, but see, like I'm like kind of in and out during work, right? Which is, you know, I draw for a living, so I'm like drawing all day. But I mean, sometimes and I have like multiple sort of trades going on at the same time, you know. So, but yeah, you're right. I think in hindsight, I definitely see it now, and jumping back in wasn't an option for me. I just didn't consider that, but I think in the future I would.
It's really hard to do.
Yeah.
You've kind of like, by the time you got out of this, it's like you'd given it some time, and then you kind of gave up, and it's hard to like flip your brain back into maybe I was wrong. Is this going to go? And remember, you can't see this big move that's coming next, right?
Not, yeah.
Kind of taking a chance on buying, you know, that little breakout there.
Yeah, it would have looked like this.
Yeah, then I think the next candle was a gap. So that would have been a clue as well. And do you not normally have volume on your charts?
I do, but it's kind of back to that one thing I was telling you about, how like the chart resizes every time I switch from time frames. So it's right here, but it's like smushed.
Oh, okay.
And so I gotta like stretch it out again. So I gotta figure out how to
right click on the scale. Did you click it? Did you right click in the scale? No, in the scale. There.
Oh, okay.
No, the one for the volume.
Sorry, right here.
Oh.
This one?
Yeah.
Scale price chart only?
Only.
I have a question. Can't you open by multiple windows?
I think that'll help with your price chart.
Yeah, maybe. I'll figure it out. Yeah, it actually works now. There you go. Oh, see, and then here it's huge. Yeah. Yeah, I'm sure I could figure it out. Yeah, but that's what I want.
Actually, put it back on now. Auto. Go down to auto.
Right here, auto fits data.
There you go.
Yes.
And auto your price chart as well. So auto in your price chart, you do from the very bottom. You can see where it says auto next to where it says log. There.
Oh, yeah, got it.
I think.
Okay. Yeah, no, I think that might be it.
Can you do multiple windows on here?
Sorry?
Multiple view, like 2 views?
Well, I have 2 screens. I don't know, you can't tell, but I'll show you my thing here. So that's my setup.
Okay.
Yeah. So I actually don't know how to split it. There's like different tabs, like you would up here.
Yeah.
Yeah. This is my first, like, actually my second month paying for TradingView, so I'm still trying to figure out all the things on.
Did they email about the Black Friday special?
Yeah, it's pretty sweet.
It's a sweet deal, yeah.
60% off.
Yeah.
And I think you get an extra month too, so it's like 13 months.
Yeah.
Yeah.
And they will send it to you again next year as well. So if you decided now to buy it for a year,
yeah,
to get that 60%, you'll get to renew at 60% next year.
Oh shoot, that's
like
fine.
I just re-upped. Like I still have 4 months left in mine.
Yeah.
And I just bought another year.
Why not?
Oh yeah. Now I've got 16 months or whatever. 17 months actually, yeah, because they give you a free month.
You said you use Thinkorswim, right?
Yeah, I used to use Thinkorswim, but
any reason why you switched over?
Yeah, for me, I thought it was just I tried to explore trials on all of them. I just thought Thinkorswim was a little clunky. I don't know if that makes sense. That's like the word I used to describe it lately. Yeah, and I don't know. I like to customize the colors. I don't know if you can tell.
Yeah.
Oh, you can't customize colors on Thinkorswim?
You can, but I mean, I just like this. It was
like it better.
More user friendly to me, I think.
Yeah, I think TradingView is a better platform for charting than Thinkorswim. Thinkorswim is a pretty decent options trading platform, though. That's their strength, is kind of with options. But the TradingView has gotten really good over the years. I tried it when it was new and didn't like it, and I've been using eSignal anyway, so.
Right.
I only actually got a subscription to TradingView because eSignal didn't have crypto. Oh. And so then I got the subscription to TradingView, and then I started using it for some other things, and then it was it was good for a couple of the international names that people used to ask for, and so now I have both, and it's cheap compared to eSignal.
And I will say, I put the charts. When I had a Thinkorswim, I put them side by side, the same chart, and TradingView is slightly ahead.
Oh, interesting.
Yeah, slightly faster. I've noticed occasionally.
That's cool.
Yeah.
Okay.
So
Now you said that
Like
you
so small. It's
connected
just like half a second, or
Okay.
like sometimes like 10 seconds delay.
Yeah.
You said you connected it to your Thinkorswim, so when you buy here, it buys over there. Is that what
I,
you're
Actually, there's no option for that. I think it's because TD Ameritrade wants you to use Thinkorswim. So,
Ah,
but anyways, yeah. Thanks, Kevin. I think that's it for me. I know Ken's waiting.
Yeah, Ken's been waiting for a while here.
No worries.
We'll get into these right away. So I'm going to, how do I make you stop sharing?
Can I just unshare it?
Yeah, I think you just unshare it and Zoom, and it'll go
Oh,
back.
it's done. I've done it for you.
Okay,
Or I will be doing it for you. Okay, I just got to move some things around now. Okay. All right. Ken, it's your turn. Sorry for making you wait so long.
No worries.
All right, so you want to look at Dropbox?
Yeah, so I've actually been holding on to this one for I think a year and a half or 2 years now.
Okay.
And for 2022, this one has pretty much gone sideways, which is actually pretty decent if you think about it, considering how the year went with all these stocks. This one has been going sideways pretty much for the entire year this year.
All right. Well, let's get a couple of lines on this and see what we see. Yeah. That's good.
Does this one look like it's about to break out for you?
Maybe. I'm going to zoom in a little bit here. I just
Yeah.
want to get all this past stuff in first. Because some of these levels from the past, like this one here, this 2775, I mean, that's from like day one.
Yeah.
It's turned out to be a pretty important level.
Yeah, I think they went public in 18. That's correct.
Or I guess actually maybe that was day 2, but nonetheless, anyway, right back to the beginning. Okay,
Right.
so yeah, I mean we've supported nicely down here.
What I noticed about Dropbox is that every time it goes down to like around the $19 or $20 range, it always bounces up. This entire year.
Yeah. Okay. All right. Oh yeah, I wanted to get a downtrend line in here. I'm not how relevant this is though. Like there's a couple different ways you could draw, trend lines on this. You could draw these lines, but they don't come into play for a long time, right? And so then you draw a line from here to here. I mean, I guess that's a reasonable thing to do. Yeah, I mean it interacted right there, so I guess we do want to do that, right? Okay, but it doesn't. I don't think the trend lines are terribly helpful on here because there's a lot of white space between price and the trend lines, if you know what I mean. But let's leave them on there anyway, because we did have some recent interaction with that. And, this is sort of looking kind of cool here.
Yeah.
These last few days. And also in a way not cool because we had a potential breakout of this today and it pulled right back in.
Right.
So it's being restrained by the 200-day moving average. The 21-day and the 100-day moving average are kind of in a way supporting So it's just this squeezing between these moving averages to a degree. It's squeezing between that 200 and this minor support level. So why didn't it break out today? When did when did this pull back? I think that's important to know.
Let's see.
So we're looking at the 5-minute chart of this now, and so pull back in the morning.
Right.
Yeah, so a nice rally, pulled back. Once it broke the day traders in this for sure. Look at look at this tight little consolidation. Wow, I should have been watching this. This would be a sweet trade. Do you don't trade into? Do you trade intraday at all?
I don't.
Oh, okay. All right, I won't go too deep into this, but this is nice.
Yeah.
This is nice for day traders. I think it's pretty obvious why it's nice, right? And why this moved down so quickly down to here. All right. So and then after it did that, it started going sideways. It didn't really do much. I think this right here should be 2 o'clock. Yeah, it is. This was when the minutes came out, Fed minutes came out. But it just sort of continued sideways when the market was going up from here, right? Remember how SPY was moving up from that point. Actually, I guess it was kind of going sideways a little bit, but had a bit of an upward slope, whereas Dropbox did not. So this is kind of telling me that it needs a little bit more time. Might need a little bit more time in this box before it can actually break out.
Yeah.
Let me drag back more of this 200-day moving average so that draws properly. There we go. That's better. I hate the way one of my biggest pet peeves about eSignal is the way it deals with the moving averages. It doesn't draw them properly unless you bring in a bunch of data from the past, like manually like that. Anyway, so yeah, more time in here, I guess.
Got it. Yeah, I think I was looking at the.
Are you looking to add to this, or you say?
No, I'm not looking to add. I actually have quite a large position in this stock.
Okay.
I'm actually I'm thinking about getting out of it after it makes a run, and then so I can use that money, liquidate that money, and use to buy like other stocks.
Yeah. It seemed. I mean, it's hanging on. It's not down as much as a lot of other ones are.
Yeah, I mean,
what, about 30% off the high?
Yeah, compared to other stocks, this stock actually did quite well in 2022.
Yeah.
Yeah.
But it also seems like the kind of stock that isn't really going to do a whole lot.
Yeah. That's what I was thinking too.
Right?
Yeah.
I just, apparently there's problems with with a lot of the cloud stocks and I mean, I've got some stock like CrowdStrike, for instance. I've got a holding in, and I like that. And and I'm looking at it and thinking about it, and it's like, if there is going to be or there's no doubt there is a tech recession, right? If you're a tech company, you're in a recession now. You're feeling it. And how long is that going to last? And then so the companies that service that end, they're going to be in a recession too. And how long is that going to go on before they come out of that? So this, Dropbox is adjacent to all of that.
Right.
So yeah, I think, this might be the kind of thing where you maybe trim some off on the rallies.
Yeah. Okay. Yeah. Sounds good. Thanks, Kevin.
Okay. You're welcome. Let's look at MODG.
Yeah, I think I like Eli better, but.
Oh, right. This is right.
Yeah, so they actually recently released their earnings, and they were doing very, very well. They even upped their guidance for Q4.
Yeah, they weird. So they initially sold it. They gapped it down on the earnings, and then they bought it up.
Yep. There
was another stock we were looking at earlier where they did the exact same thing.
Yeah, so this one they're actually doing very well.
This did have a nice run after earnings, and you know, it looks like it's swinging back up after pulling back.
Yeah.
But not with a ton of strength this time.
Hmm.
I mean, this is a big move in here.
Yeah.
So, you know, not surprising we had a bit of a pullback. So, yeah, you want to see this continue to grind higher, right?
Hmm.
But, you know, this is a nice U-shaped bottom. That's cool. You could even call this a cup and handle.
Hmm.
Let's draw that in.
You have this one too, right, Kevin?
No,
Oh, okay. I thought you do. Okay.
I did. I
You did. Okay.
graded this. Yeah, I was sort of like, I traded it,
Hmm.
if that makes any sense.
Yeah.
Okay. Yeah, there we go. All right.
Yeah.
So we've got the cup and handle thing going on here. Let me draw in the handle. Handle's a little bit messy maybe, but it's definitely there.
Yeah.
So, you know, what do you if you're looking to play this, there's two ways you can play these cup and handles, right? You can
I already have a position in this one.
yeah.
But similar to Dropbox, I'm thinking about just maybe getting out of it. But I want to see if it has potential to, you know, like run higher in the short term.
I think it does.
Yeah. Because my cost base is actually like, I think it was in the 16 or 17.
Well, that's good.
Yeah.
Yeah, I don't think you're going to see those levels again.
Yeah, and it's kind of I don't know, I'm kind of conflicted where like I kind of want to hold on this one for the long run too, just because I feel like it has a pretty bright future. But there, I feel like there are better opportunities on the market right now. In the market.
Yeah, I mean there might be.
Yeah.
But
and then I just saw that there was an insider buy yesterday too.
Okay.
Yeah, and then I was like, yeah.
Okay, so look at, I mean, if this cup and handle plays out like it's supposed to, what you do is you measure from the bottom of the cup up into the rim. Okay, so you know that gives us like 30%, right? And we just take that, we drag that over there, and
25.
You know, so that gets you up into near 30, right? And that, you know, I mean, looking at the chart, that seems like if this goes on a really nice run, there is overhead, but it looks like, you know, there isn't like fatal resistance until around 30. So, you know, that does measure out nicely onto this.
Yeah.
So, like, imagine these guys probably do fairly well at Christmas, right?
Yeah, that's what I'm thinking too. Yeah.
So this quarter they're in now, you know, have you actually looked at their earnings? You know, measured this quarter, I guess, you know, fourth quarter. Is it typically a good quarter or not? Actually, I see an estimate of minus 19 cents.
That's for Q4.
Plus 19 cents in the last one. Why would that be coming down? That's not good. That's interesting. I wouldn't That's totally
just estimate,
this
right?
out. Sorry?
Yeah. Last year in Q4 they
Okay, go ahead.
Yeah, typically in Q4 they don't perform as well compared to Q3 or Q2.
Oh, interesting.
Or the first 3 quarters.
Okay. Well, presumably everybody knows that.
Yeah.
But I mean,
they still beat though. They always beat on top and bottom.
Well, that's good. Yeah. So I mean, this cup and handle might not play out all that nicely. Then might be asking a little much for this quarter.
Yeah.
But it's something to keep an eye on. You know, if it breaks out of the handle here and starts breaking out above this rim, try and hang on.
Yeah.
Maybe, you know, if it does break out above there's going to be a level right here at 25.
Right.
That might be a place to take a little bit off.
Mm-hmm.
That would be totally logical, taking some off there.
Right.
But if it's got momentum, you know, it could. I could definitely see this running up to 30 over a period of, you know, a few months.
Yeah. Sounds good.
Cool.
Okay, thanks, Kevin. Yeah, thanks for our help.
All right, I think I'm gonna lose my voice soon.
Yeah.
I am.
That's a longer session today.
Call it a day. Unless there's any last minute questions, I think we'll call it a day here. So we'll be doing this again next Wednesday.
Mm-hmm.
And I will be doing a weekend video. Thanks everybody for coming out. Have a excellent Thanksgiving. I hope you all get to spend some time with your families. All the Americans anyway. Hope you get to spend some time with your families and enjoy Thanksgiving. And we will see you all in the Discord and see you all here next week. Thanks for coming out, everybody.
Thank you.
Thanks, Kevin. Happy Thanksgiving, everyone.
Happy Thanksgiving. Thanks.